Cast is now starting. All attendees are in listen-only mode.
Okay, welcome to the latest webinar, TaxLink webinar, as part of our webinar series, monthly webinar series. Today we have a very exciting discussion on beneficial ownership and public registries of beneficial ownership. We had a similar discussion about 2 years ago, looking at the beneficial ownership in the UK. Today we're going to look at more generally this issue. And we had Peter, who was involved with us 2 years ago, and we also had someone from Global Witness 2 years ago. So we're kind of doing a more general repeat of that webinar, which took place 2.5 years ago. So just to get some admin issues out of the way, this webinar is being recorded. We're going to have a full audio recording available for all of you shortly after the event. We'll also have a full transcript that we'll make sure to share with all of you. The transcript will take us a little longer to get out, but that should be available too within a couple weeks. On your GoToWebinar control panel, you will be able to submit any questions. So if you are listening in and something pops into your head and you want to ask our panelists, make sure to drop me a note there, and I'll try to incorporate that into the discussion. So without further ado, I would like to have our panelists introduce themselves, and then we'll just jump straight into the questions. So Nienke, how about introducing yourself first?
Hi everyone, I'm Nienke Palstra. I'm a campaigner at Global Witness here in London. I work on anti-money laundering issues. If you aren't familiar with Global Witness, it's an international NGO that was set up about 2 decades ago, and our focus is very much on looking at the links between corruption, natural resources, and human rights. We started a lot of our work in Cambodia, looking at the links between the ivory trade and conflict there. But now we run campaigns in a number of areas, amongst them issues around land rights and human and environmental, land offenders, financial crime and anti-money laundering, oil, and conflict situations. So my particular area of expertise is around beneficial ownership transparency, and that's why I'm very happy to be contributing to this webinar today.
Excellent. Thank you very much. Peter?
Good morning, good afternoon, good evening, everybody. I'm Peter Wilson. I'm an international tax advisor. I'm based in Dubai, and I've been based in Dubai since December 2016. That gives me an opportunity to meet a number of interesting people who have special interests in beneficial ownership, what tax authorities may learn about them through exchange of information and access to registers, and talking to people who have these concerns and helping them to understand what their obligations are with respect to provide information and how there's nothing nasty about it. It's actually the actual information is fairly straightforward. The difficult part is working out whether you have to provide it. I see this as a particularly growing area, and I don't believe we've begun to see any of the real disputations between taxpayers and tax authorities and what have you as a result of this information. But I expect there'll be a lot of that in the next 5 to 10 years, and happy to share my experiences with people listening in and a wider audience.
Excellent. Thank you, Peter, for the introduction. So let's get started with the questions. We have here about 9 to 10 questions that were sent to us by our members. Some of them were sent to us by Nienke, and I actually added a few too. So let's get started with a general question just to give us kind of an overview as to what's going on in terms of beneficial ownership registers. So the first question is, which jurisdictions have established registers of beneficial ownership, and how successful have they been in providing greater transparency? Nienke, you want to get us started with that one?
Sure. So here at Global Witness, we're very much focused on the issue of having public registers of beneficial ownership. So I think your question, you're asking about registers in general, of which I think there's probably a much bigger number of countries. But my latest kind of overview focuses particularly on how many countries have committed or implemented registers which are accessible to the public. And at my latest
Sorry, you're breaking up, Nienke.
Okay, sorry. Is that? I can put my headphones in if that's better. Yeah?
That's better, that's fine. You just broke up for a second there.
Great. So at our latest count, we've seen that there are 37 countries who have either already implemented one of these registers or are in the process of doing that. So amongst those, we have the 28 EU member states who will, as a result of the 5th Anti-Money Laundering Directive, be required to set up such registers. The 4th directive already required them to set up a closed register, which would be accessible to people on the basis of a legitimate interest test. But now these registers will be opened to the public. So that's 28 EU countries. Then you have the European Economic Area countries, Norway, Liechtenstein, and I'm forgetting the other one, who will also have to implement these standards. And you have a number of developing countries, amongst them Nigeria, Ghana, most recently Indonesia, Afghanistan, and also in sub-Saharan Africa, South Africa. So we're really seeing a lot of global momentum around the issue of beneficial ownership. I think also the emphasis put on this by FATF and the reviews that are taking place, countries are increasingly now moving towards definitely setting up such registers and also more and more making them accessible to the public. Public registers exist now in Ukraine, in the UK, in Denmark, and within the EU, as I mentioned previously, countries are at different stages now of implementing the legislation. So I would say, all in all, it's growing at like an exponential pace at the moment.
I found that there were registers. I'm not sure whether they're public registers, but I found registers also in Brazil, Cayman Islands and Singapore. And for those of us who have worked with our friends in Singapore, you'll know that they're exceedingly careful and very expansive in their information requests. So their public register, I'm sure, will be very good and very open and very wide for people to be able to see who owns companies.
Excellent. Thank you, Peter. Thank you, Nienke. So the follow-up question, I guess, is related to this one. We've mentioned already those that have established these registers. Which jurisdictions are actually moving forward with the creation of registries of beneficial ownership? And what sort of challenges have they met in setting these up? Nienke, get us started there.
So the country which I know most about is the UK. They were the first country to actually set up an open data register of beneficial owners of companies. They started this in 2016, so they're now several years into the implementation of that. I think for the UK, this came as part of a big anti-corruption drive. This was one of the things that David Cameron really prioritized, also at G20 and G7 level, or G8 at the time, I think it was. In terms of the challenges, I think, first of all, getting legislation through, getting people agreed that the register should be in this open data format, that was a challenge. But ultimately, a lot of the business community in the UK was in favor of having this register accessible. Now what we're seeing is the register is in place. It's being used a lot. In terms of functionality, it's quite easy to access the web interface. You can also download all the information as structured data, which means that you can then compare it with other data sets. For example, you can compare it with lists of politically exposed persons and politicians in different countries. You can compare it with international sanctions lists. And it gives you an unprecedented picture of who owns UK companies, ultimately. But what we're seeing is the difficulty is that nobody is verifying this data in a systematic way. So there is a huge issue around accuracy and to what extent you can trust the information that is provided to the register. Because Companies House, who's tasked with overseeing the register here, they take the information given to them at face value, and they don't necessarily require much further evidence of somebody's beneficial ownership. So in the UK, there's no requirement, for example, to send a scanned copy of your identification to show that you you have this piece of identity and you are the beneficial owner. In Denmark, that is the case. There's also been a huge issue around how data is manually inputted, and it's created a lot of avoidable problems where people misspell their nationality. So instead of having a drop-down menu, you're getting about 100 different spellings of British, or people are saying that they're Cornish, which isn't even a real nationality. And so you also have an issue around birth dates, and that maybe people are misunderstanding the form and they put the current date. So what we're seeing is that in the UK, there are over 4,000 beneficial owners under the age of 2. So I mean, you get these images of these sort of armies of company owners who are toddlers, but it raises real questions about, you know, obviously, how could they all ever control a company? But also, how can we improve the UK register to make sure it is a reliable resource? Because the whole point of setting this up was it was meant to be something that was going to help civil society, journalists, but also the business community in having a trusted resource to find out who their business partners are. So maybe I'll just leave it at that and we can exchange a bit.
Yeah, I think there's an education issue here as well, and that a couple of instances that I think are fascinating is where I know from my closeness to either a family or having met people giving them advice, and I know that there's a trust on the top of a company, and I know who the beneficial owners of the trust are, and I know who the protector and the settler and the trustee of the trust would be. And yet when I looked at the register of the UK subsidiary of that group, it showed that the owner was another company outside the UK, and it didn't actually show that there was a trust on top of that company, and it didn't show who the beneficiaries or the trustees and the settler and the protectors of that company were. And I wondered how was it that somebody was able to complete a form saying the person of significant interest control was another company, when I plainly knew that there was another structure on top of that. And I was thinking, well, was I misunderstanding what the register was supposed to do? Or was the person who was completing the form that was sent to Companies House misunderstanding? And there are very complicated issues in working out who controls a trust, very complicated issues, and I understand that. But I think that maybe we've got a little further to go before the data on the register in the UK is actually reflecting true data, who actually owns these companies. And at the moment, we've either got people making innocent mistakes or people making intentional mistakes, and maybe it's some of both.
Yeah, maybe just to build on that point, it's definitely something we've seen, that there is, on the one hand, people misunderstanding the rules and needing a bit of like an education exercise to get them up to grips with the new requirements and who a beneficial owner is. On the other hand, we're also seeing that probably a large number of companies are also deliberately circumventing the rules by, you know, listing a company overseas as their beneficial owner, sometimes in a tax haven. So I think we found, I can find the stat, we found a huge number of companies who were, it was, 7,000 companies who declared they were controlled by companies in a secrecy jurisdiction. There was another 25,000 companies who said that they're ultimately controlled by a company who then don't go on to list who the beneficial owner of that company would be. We found 5 beneficial owners who control each more than 6,000 companies. So what you're seeing here is that clearly there are some strategies that companies may be using not to reveal their beneficial owner, or they still need to find out how to report it properly. But if you don't have Companies House chasing up these cases and asking them like, hey, there's something wrong with your filing, and also starting to sanction those who are lying or avoiding providing the information, you're not gonna get the register in a place where it becomes that reliable resource, which everybody wants it to be.
I think the problem here is, as a professional advisor, that the rules were drafted to be complete rules from day one, and in a practical world, that's too difficult to achieve. That I think they should have been much simpler and phased in over, say, a 5-year period, with each level of complexity, with an additional level of complexity added at each year. For instance, that if we're just talking about trusts, in year 1, let's say you're required to disclose all people who are beneficiaries, and that in itself poses a massive problem, because what happens if there are no named beneficiaries? It's referred to as a class. But let's just assume for the discussion now, in year 1 you were required to disclose beneficiaries, and in year 2 you were required to add settler, and in year 3 protector, and in year 4 trustee, or maybe in different orders. But I think what's happened is that there's this massive demand for information put on probably a large range of small firm advisors without sufficient training. Because if we're talking about the major firms of accountants, major firms of lawyers, predominantly they're working with listed public companies, and by and large, this is a problem for the smaller group owned entity. The entities are owned by a small group of people, not by entities that are widely spread. And I think that the professional advisors who look after the companies that are owned by a smaller group of people, more often than not, are smaller professional firms. And I think here we have a conundrum. How do we get a massive amount of information quickly on a very large number of corporate entities that are looked after by people who are in the smaller firms, where smaller firms are struggling to deal with commonplace accounting and compliance matters, and a lot of these firms are going out of business or merging because they can't keep up with all the regulatory requirements and information requirements. And this is another one that's making life much more difficult for them. So I suppose if I had been drafting these rules from a practical viewpoint, I would have tried to phase them in. Now, I know that wouldn't have got all the information that we would want in the first year, but maybe we're not getting all that information we want in any event.
And I mean, one thing I would say about that, though, is that for the vast majority of companies, this shouldn't be a complicated exercise. I think, the average number of beneficial owners in the UK is around, it's between 1 and 2 individuals. So normally, if you have quite a straightforward ownership structure, it should be relatively easy to report that. It's when you start getting into a situation where you're having to go up further the chain and you're reaching a dead end. And I would say that's where it's exposing also a risk that's existed for some time, where these small professional firms maybe simply don't know who the beneficial owner is of companies that they're servicing. And that in itself is a huge risk for them, because I mean, the way we're coming at this as Global Witness is our investigations over the past years have shown that anonymous companies are involved in a huge number of grand corruption cases. And every time we're investigating a new situation of a corrupt politician in a country having profited from a shady mining deal, they will structure that bribe or that payment through layers of anonymous companies stretched in different jurisdictions, many times also using UK companies. And I think it's so what I want to say is that the fact that now we're seeing these problems with the UK Beneficial Ownership Register, to me, it's also just showing, it's helping us already weed out where we think there are suspicious companies that need further investigation. And it's also just highlighting this problem that's existed for a long time.
I think one comment I'd like to make to that, and while I agree with that 100%, if the professional advisor, and I can't comment on what the Law Society rules are, but I can't imagine they're a million miles away. But if you're an accounting firm, when you take on a client, you have to give a letter of engagement and you have to do KYC, AML, and it's a requirement of the Institute of Chartered Accountants that you know who the ultimate client is. You know, so if these small firm professional advisors in the UK are doing their job properly, and if they're complying with their own regulatory body rules, they will know who the ultimate beneficial owners are. I mean, I would never take on a client without knowing who the ultimate beneficial owner or owners are. Now, maybe that's me, but you know, that's just a fundamental rule when we become a chartered accountant, that we have to know who our client is. If only on an engagement letter, you would generally want the UBO to sign it off to make sure you're going to get paid. So that I'm not sure I'm totally aligned with Nienke, and that the people don't know who the ultimate beneficial owners are, unless you've got a professional advisor who's conspiring with the people who are setting up the groups to make sure that the real owners of the entities aren't disclosed. Now, that's going to be a problem whether we have a bunch of rules or don't have a bunch of rules. But if you've got proper professional accountants who are fulfilling their obligations that the Institute of Chartered Accountants puts upon them, and has a letter of engagement, which is also required for the PI policies, there should be absolutely no excuse for them not knowing who the clients are. That's the theoretical position, and I accept that there's a gap on some of the practical side.
Excellent. That was very engaging. Thank you for that. I think we've covered pretty much the third question, which is what's required for the verification of beneficial ownership data. I think we've. Is there anything else you want to add on in terms of verification of data and the requirements?
Look, I think we need to have a system in place where data is verified. I don't see why. I mean, it would be almost unthinkable that one of these entities doesn't have a bank account somewhere in its chain, because why set up an entity to do a transaction if you don't have a bank account to take the money? And by definition, if you set up an entity to do a transaction and the bank account is somewhere else, the banking institution that's taking the money for a different company is going to be very suspicious of that transaction. I've never worked with a bank that doesn't have really sophisticated and complex AML rules where they demand to know exactly who the UBO is. So I think the link here really is that we should be requiring the banking institutions, the financial institutions who have financial accounts for the entities, in the same way that they're providing that information, or have or soon will be under CRS. They should be swapping that information with the beneficial ownership registers, because then I think you would really get very quickly to who the UBOs are in these entities.
Yeah, I think that's a really good point, and I would just point out that as part of the EU's 5th anti-money laundering directive, there is a requirement on what they call obliged entities. So real estate agents, accountants, bankers, a whole swath of different professions who would have to now report every time that they run into a discrepancy of the beneficial owner that exists within the National Register, and as part of the due diligence that they do within their profession, they would need to report that discrepancy to the register. So in that way, you would start flagging up every time that there might be an issue like that, which I think will be hugely helpful. But again, it's an issue of to what extent that will happen and be enforced, and I think it will be really important for that to happen. And the other thing I would just point out is that I think this is where sometimes the public sector lags behind some of the more sophisticated techniques that the private sector has put in place, and financial institutions, in terms of flagging up risk and verifying this information. So I would definitely I would definitely support what Peter just said about taking the technology and the expertise that banks and other financial institutions have put in place. But also at Global Witness, we've just done what is a very sort of initial project where we've worked with a group of data scientists, and we've downloaded all of the UK's beneficial ownership data, and we've started combing through that with what we call artificial intelligence and special scripts, looking for red flags that we've identified as being important for money laundering. And that's already thrown up, a huge number of companies that merit further investigation. And if we can do that with our resources, then surely the public sector should be capable of doing some kind of automated verification. But unfortunately, government here has already said in a recent parliamentary discussion that they don't plan to do any automated verification, which I think is a real pity.
I think another side of this is the practical side, that I don't think it's right that there's a requirement put on real estate agents, accountants or lawyers, because those people are financially incentivized to help their clients, so that their judgment can be swayed by the amount of money that they can be paid. Whereas if you have a financial institution, the probability of them being swayed by the amount of money they're going to be paid for doing something or not doing something with respect to disclosure, I think is much lower, because they've got a whole franchise risk, and we've seen what's happened over the last 4 or 5 years to Swiss banks in the US. My view here is that we should just be forcing the financial institutions to link the ownership information that they have directly to the public registers, because we know that the financial institutions, the people in the financial institutions have a strict liability, a really strict liability if they get this wrong. They take it very, very seriously. The probability of them being motivated to do something wrong by money is much, much less than real estate agents, accountants and lawyers. So that my view is the probability of accurate information coming from the financial institutions is much higher, much higher than what it would be if it was coming from these other people. That's where I think if we can get the financial institutions to send the information, then we're going to get much more accurate information much faster on the public registers.
Excellent. Anything to add to that, Nienke, or?
The only thing I would add is that I think, from what we've seen with banks, unfortunately, is that they can be swayed by huge sums of money that they can accept. And I think, the scandals in recent years around HSBC, we're also doing a new analysis on the 1MDB scandal and looking at the role of Standard Chartered here in the UK and JP Morgan. So I think, unfortunately, I do think I'm totally in agreement that we need to be working with financial institutions on these registers, but I think that the due diligence requirements that are put on all these different professions should hopefully result in reporting these discrepancies and improving the accuracy.
I think, if I can make one comment there, one concern that I have about the approach of civil society generally is they look at what people and institutions were doing a few years ago and assume that they're still doing that. Now, I don't think that's a valid assumption. I really don't think it's a valid assumption. Banks have been penalised so much money that the probability of them doing something wrong is much, much less now than what it was. Yes, you'll find an institution for one reason or another that will do something wrong, but the major global financial institutions of the world cannot afford to do anything wrong. They've seen the consequences. Heads are rolled, bank balances have fallen, government coffers have gone up. I think realistically, it's not fair and it's not appropriate to say that what some banks did in the past, which was absolutely and totally wrong, is still being done. I mean, it's also not true to say that there's still loads of tax haven companies being formed by people who are in OECD countries. You know, it's impossible these days now for somebody to form a tax haven company and have a bank account in a second jurisdiction. I shouldn't say it's 99% impossible to do that. The banks will not give you a bank account for, say, a BVI unless you can say that you're actually living in the BVI. And if somebody goes and lives in the BVI and becomes a BVI resident, then, you know, they're not avoiding any other country's tax liability with respect to their personal affairs because they're a BVI resident. I mean, I think we've got to understand that the world has changed dramatically, in part because of civil society in a very positive way. But I think civil society has to respect that their work has actually caused a change, and that the world has changed, and that we shouldn't be saying people are still behaving today the way they were 2 to 5 years ago.
I mean, I think we would also acknowledge that it's not that there haven't been improvements. There definitely have, but I would say, you know, for corruption investigations take time. So we're still looking through all the cases that are, you know, say have happened in the past 5 to 10 years, and unfortunately, I haven't. It's not yet come to a point where we feel that the financial sector has definitely, you know, turned around a corner and that we can say everything is happening in the way it should. But, you know, I very much hope that's the case. And I think we're very eager also to work with, you know, different sectors and to understand how the improvements are working. And I think we're just, in terms of of changing things in a systemic way, I think we're a bit concerned that the kinds of fines and sanctions that have put in banks that were found to be complicit in some of these schemes have been we're a drop in the ocean in terms of the profits that they make. So to what extent they actually act as a deterrent, and it's you know, these huge banks that are incredibly powerful and somehow are able to continue to operate without any kind of sanctioning.
I work with a lot of financial institutions, and there is not one of the financial institutions that I work with who will do anything that put them in the crosshairs of these rules. They're petrified about these rules. They would rather not take on an account. There are very, very, very few, if any, financial institutions or corporate service providers outside the US that will even deal with a US person. And you can read that FATCA is a business degenerator for US institutions. Based on my experience, there's been a marked and a profound change in individual taxpayer client behaviour and the behaviour of financial institutions. I've been a professional advisor for more than 35 years and in a range of different countries, and I've seen how structures have changed, what people do, how transactions that people have done and will do change, and how behaviour has changed markedly over that period of time. And based on my experience as a professional, the work of governments and the work of civil society has had a massive positive impact on the rules and regulations and people's performance. And obviously it can't be perfect from day one, and we're going through a transition phase. It's a tunnel. It's a tunnel. The point I was making is that I thought we should phase this in, and that the phasing period would be shortened if we linked the financial institutions to the public registers.
Yeah, I think that's definitely a valid point.
Excellent. Okay, let's move on to the next question. This has more to do with, this was submitted by a retired member of parliament in Canada who's a member of TaxLinked, and he actually does a lot of anti-corruption work. And what is being done to ensure that those who make beneficial ownership declarations are held accountable should such disclosures prove to be false or misleading? This can be, related to the UK or, to other public registries throughout the world. What is being done to hold people accountable for providing false information or misleading information? Nienke?
Well, to start with the UK, in the UK there are sanctions which can be applied, and they include a fine or even a criminal sentence or both. For example, there was a problem identified with Scottish limited partnerships. They were first out of the scope of the register, but had been brought within, and there was evidence to show that they were being hugely used for nefarious purposes. And 4 out of 5 Scottish limited partnerships weren't declaring their beneficial owner, and of the ones that were, there was like a 40% rate of beneficial owners who were coming from post-Soviet countries. So it raised a number of concerns. But although these, in theory, you could be fining the Scottish limited partnerships £500 a day for not declaring their beneficial owner, and still many of them haven't. Not a single fine has been issued. And it's the same for companies who have either not provided the information or lied about their details. And I think that's where Companies House has said there needs to be a grace period as people get their heads around the rules, and there may be, simple reasons of people not understanding how to go about it. But I think now that we're, 2 years in, this is when you start to need to see dissuasive sanctions kicking in. And I know that in other countries, it's usually also accompanied by sanctions. But again, the whole point is, are they used?
Yeah, my experience with it is that I haven't seen anybody get any sanctions. Companies House is very happy to fine somebody if you don't put your financial accounts in on time, because that's very easy for them to know when their financial accounts are lodged or not. But it's very difficult for them to know whether the information UBOs is correct or not. But, there's a lot of big data out there, a lot of big data, and maybe we need to be applying a blockchain technology or something or other, so that it becomes very easy for the registers to know whether the information that's been lodged is right or not, and automatically fine people. But I think we're a few years away from that. I just don't think the systems and procedures are working yet to do that.
And the only thing I would add is that, for Companies House, that they have a huge task. There's a huge number of companies in this register, and until recently they only had 6 people who were responsible for overseeing it. They've recently increased that to 20 people, but I think unless you properly resource that kind of that kind of responsibility, then it's not to say that the people in Companies House aren't trying, but they just don't have the capacity to properly address this.
But isn't this a fundamental flaw in the design of all these things, that people are forced to comply, so they'll put in something, and I was fascinated with I'm Cornish, but I mean there should be some software that automatically picks that up and throws it out, but there's too much of a demand on too few financial resources to be able to create the software and the human resources to validate this stuff. People are saying, right, I've complied because I've put in a form, and they think, well, that's going to give them another 3 or 4 years worth of breathing space, because nobody's going to look at that form, or nobody's going to know whether what they've put on the form is right or wrong. So it's really a major design flaw in the whole system.
Excellent, thank you. Okay, now shifting gears a bit, let's look at the issue of open data registers or public registers versus non-public data registers. One of our members from Hong Kong basically asked this question, and she says that in Hong Kong, the registry of significant controllers is only available for inspection by law enforcement officers and not the public. Do you agree with this arrangement, or is there a benefit to having a public register that is not open to the public versus one that is public? What are your thoughts on that, Nienke?
Well, there was a very big debate on this also during the EU negotiations, and our position is clear as Global Witness and together with many other civil society organizations that we strongly believe a public register is not only the most cost-effective and efficient way of dealing with this, but it has so many benefits in terms of citizens, company owners being able to see who their business partners are, in terms of being able to link up the data with other data sets. There was a cost-benefit analysis in the UK when they were considering whether to opt for a public register, and it found twice, the same consultant did the assessment, that the advantages of setting up a public register and all the economic advantages associated with that would far outweigh the cost of making it public. I think, just setting up the register itself is costly, but making it public isn't necessarily costly. And why we're particularly interested in it is because having this information in the public domain gives you an opportunity to question where you see a mistake. So in our investigations into corruption, when we come across a company, say in Hong Kong, and we can't find a beneficial owner, that's where the track ends then. If that register is public, we can then at least see who that company has listed as their beneficial owner. Maybe it's not the right person, but at least you have a point where you can hold them to account and say, hey, who is this person? We want to find out more. And so I think what you're seeing now is that some countries have said a closed register would be sufficient. It would be available to law enforcement, to tax authorities. But I think the benefits of making it public far outweigh any of the risks. And some of the risks people list are around privacy or around personal security. And I think if you go about it in the right way and have the right case-by-case exemptions, and you make sure that sensitive information is not put online. So, for example, putting a business address as opposed to a residential address online, that those risks can be mitigated. And I think there's already in the UK a huge interest in this data, and people are looking it up in a very regular way.
I agree entirely. I think the privacy requirement needs to be strengthened. I currently have a situation where a very, very private person wants to acquire a residential property with money that's legitimate money, because I know the money is 100% legitimate. They don't want to be recorded as a shareholder of the company or a director of the company, and the real estate agent wants to know who the client is, and my client doesn't want to disclose their name. So somehow I've got to come up with a system whereby the vendor can be satisfied, and yet the purchaser can be satisfied at the same time. We shouldn't underestimate how serious these issues are and how difficult they are to actually bridge in practice. But the commercial in confidence sensitivity nature of information is also relevant. I once, about 10 years ago, I had a case where the company was owned by individual A, but individual A wanted to set up another company to compete with his own company, so that the marketplace believed there were at least two companies in the marketplace. Well, you can draw a conclusion on whether that's ethically and morally right, but that's what he wanted to do, and he didn't want the suppliers to company A to know that he was actually the owner of company B. So I mean, there are real issues in the marketplace that we need to address, and if we can address them properly and sensitively and carefully, then yes, open registers are the way to go, for sure.
And I think maybe, Matteo, if you're asking specifically about Hong Kong, or is that the next question? I don't want to jump ahead.
It was I combined the two questions. So, I mean, if you want to comment on Hong Kong specifically, yeah, that'd be great.
Yeah, so in terms of what Hong Kong has put in place, I would say that this falls far short of what we would want to see, because they haven't even required a closed central register. All that they have said is that a company needs to hold this information and make it available upon request, and that request can only come from law enforcement. So from our perspective, this is problematic because it means every time that law enforcement wants to access that information, they have to probably already have some case that's ongoing and some level of evidence to ask for that information, and they have to go approach that company directly. So you have an issue where you're potentially tipping off the company which you're investigating. And this is why we always advocate for a centralized register, and also for that to be made publicly accessible, so that law enforcement can have access to that in the most easy of ways. And it's not just about law enforcement in that country, but law enforcement in other countries who will then be able to see that information.
I have a theory about that, and I wrote about that in my PhD. And the theory about this system in Hong Kong is that it's that the Chinese government has encouraged that system to be developed, because the Chinese government wants essentially one way for money to flow into China and one way for money to flow out of China, and they want it to flow through Hong Kong because that's the nearest country to China that China has absolute ability to see what's going on. So in an era where China is still attracting significant FDI, China wants to know whether that FDI is really round tripping from Chinese investors or truly third country money. And the best way they can find that out is to have limited countries that they have to focus on. And when you're looking at money going out of China, it's the same thing. So my theory here is that this is an actual purpose of this register in Hong Kong, to design it this way, so it is the place that attracts FDI as a conduit into China, so China can really keep its foot and knowing on what's going on. And I can't see that there's any other reason for this register being structured in this way.
Okay, thank you. We have a few questions here from audience members. I will include them right now. We still have another 15 minutes. But one was actually about the U.S. And the question is kind of, can anyone force the U.S. to actually set up a register of beneficial ownership? Any comments on the U.S. and settings this sort of registers? Nienke?
Right. Well, the level of debate is very different in the U.S., but I would say, we have an office in D.C. and we're working very closely on this issue. And I think, ironically, in the current political climate in the U.S., beneficial ownership transparency is one of the few issues where we have bipartisan support right now. But what do I mean then by beneficial ownership transparency in that context is very different. It's about simply either at state level or federal level collecting that information and making it accessible to law enforcement, and even that is controversial. So I would say, the way this is being discussed in the US is very different, but we're seeing slow progress because there's been a number of, I think that the security aspect plays very importantly in the US. It was found that an FBI building owned in, I think it was Washington State, if you looked at the beneficial owner of that piece of property, actually sent back to Iran. So, I mean, they're also seeing that planes in the US, and the registration of that is problematic in that they don't know who the beneficial owner of those planes are. So I think we will be seeing, hopefully, fully progressed, but there's a short window of time now for the legislation to be passed before the midterm. So I think in the next couple of months, hopefully, we'll have some good news there, although progress is very slow.
I have some news on that, in that I heard last week that a number of counties in Florida started a project in the last year to study the purchase of homes in Florida that have a value worth more than, I think, $3 million. And they focused on 2 or 3 counties, and they identified that something like 30% of the companies that were buying Florida homes were owned by non-residents of the US, and this alarmed them. So they extended the research program from, I think, 2 counties to maybe 5 counties, and the initial results of the first 2 counties were confirmed. Then I heard that they, if I remember correctly, they decided to see whether it was the same in somewhere in New York and somewhere in Colorado. And much to their amazement, it was confirmed. So if I remember what I was told correctly last week, that within something like 5 months, or 5 or 6 months from the time Florida decided to test the water on this process, they've decided to introduce it statewide. So this is a project apparently to try and determine who's owning real estate, but if they get it up and running for real estate, it's a short hop from there to having it for all companies.
I think that's a really interesting point, and real estate is another area that we are very much interested in. And in Canada recently, I saw British Columbia has also put in place new transparency rules around companies owning property there. And I would just say in the UK, obviously we have the UK Beneficial Ownership Register, but what's also now going to be created is a register of companies that own UK property, so overseas companies. So this would have an extraterritorial aspect to it, because what our research and what many reports have shown is that, for example, in London, look at the high-end real estate here and the number of corrupt politicians, the number of incredibly expensive properties that have been bought with dubious wealth. And I don't want to, take us on another trajectory, but there's also now this what is called an unexplained wealth order, where people will, where the burden of proof is shifted on assets worth over £50,000, and where the person owning that property will now have to prove how they've been able to buy that with legitimate means.
Okay, thank you. We have time for one more question, and then I'll ask you for some concluding remarks. Let's look a little bit at the transparency of trusts. What's being done in that area? What needs to be done in terms of providing greater transparency to trusts? Peter, you want to get us started? I know you've talked about trusts throughout the discussion.
Well, my experience with trusts is the words controlling persons, and it's going to be very difficult. It's going to be very difficult to have successfully implemented registers that are publicly available for trusts, unless the information is required, unless the information is obtained from financial institutions, because there's no sense in having a trust if there isn't a bank account. And the banks know everything about these trusts, otherwise they wouldn't open a bank account. That's the best way to do it, and I think it would be a great idea if this is the way that in the end there was full transparency on the controlling persons of trusts.
That's very much also where Global Witness comes from. We also advocate for public registers of beneficial owners of trusts. And what we've seen now in the 5th EU Anti-Money Laundering Directive is that there will be a requirement on all member states to have a centralized register of beneficial owners of trusts. But there's, it gets complicated with trust because you have all these different potential controlling individuals. So in order to avoid duplication of registration in multiple member states, where say you have a settlor in country X and the beneficiaries in another country and the trustee sitting in another country, they have said that initially the trust will be registered wherever the trustee resides. And if that doesn't result in registration, it will be where the trust enters a transaction. So that could be the purchase of real estate, that could be the opening of a bank account. But I think it's going to be really tricky. It's going to be really important to see how countries go about this. And I think there's still a lack of understanding about how trusts really operate. And there's legal difficulties because not all jurisdictions recognize trusts in their legislation. So they're having to regulate something that doesn't actually formally exist in their country, but which is obviously still, present and conducting activity. And I would just say, in terms of our interest in trust, it's also because we've seen that so often in a corruption case, with the different layering of companies, you get to a trust, and that's almost where law enforcement gives up, because it's so difficult to disentangle who the controlling entity is behind that trust. And we've released a briefing where we've outlined some 3 major case studies where trusts were used for nefarious purposes, which includes a Brunei prince using a Jersey trust to protect London assets, includes Yanukovych using a Liechtenstein trust to hide away his money. And in the Paradise Papers, just about 6 months ago, there was a number of trusts being used also for tax evasion purposes. So I would say watch that space, because it sounds like there's a lot more going to happen.
So why is a Brunei prince owning a London property through, I think you said, a Jersey trust? Did I hear you correctly when you said that was for a nefarious purpose? Well,
because this Brunei prince apparently, I have to phrase this for legal reasons, but he had bought this property. There were strong suspicions about how he had bought that with legitimate means. Brunei then attempted to get those assets back, but they were prevented from doing so because the property was owned through a Jersey trust where the beneficial owner wasn't clear. So that's where kind of the asset freezing and recovery becomes difficult, because you can't establish clearly that he is the beneficial owner of that property.
Okay, but are all these rules on beneficial ownership and what have you, is the root of the purpose of the rule designed to identify people who have been evading tax? Surely that's the essential reason for beneficial ownership rules. Not to give people information that they can use in a commercial dispute.
This isn't a commercial dispute. This is about a Brunei prince stealing a lot of money from his country and buying a property with that.
Well, I think you need to be a bit careful, because maybe the facts aren't exactly as what you think they are. But I think the point we need to discuss is whether the beneficial ownership rules are there to stop people evading tax, or whether they're there for a broader purpose than stopping people evading tax.
I mean, we would say that the beneficial ownership rules are there to, to stop corruption, to help identify corruption where it exists, and obviously there's a lot of interest in the tax agenda as part of this as well. And then there's the broader kind of public accountability and people wanting to know, who owns companies in their jurisdiction.
Okay, excellent. I think that brings us to the end of our discussion. I think it was very lively and very insightful. Any concluding remarks from either of you? Peter, anything to?
I'm all for beneficial ownership rules. I'm all for them rethink so they become more practical and not an ideal theoretical world, and I think that we can move to that position very quickly if we shoehorn the financial institutions that already have all this information and are already giving, pardon me, already giving this information, or soon will under CRS and FATCA. So that they're not collecting information to give for these beneficial ownership rules that they don't already have for another purpose. Just asking them, or asking the technology that is now sending this information to various tax authorities to make a fork on its way around the world and end up in the company's house offices of the world as well.
Excellent. Nienke, anything, concluding remarks?
Yeah, I would just say that, you know, I think we're at a really exciting moment in terms of beneficial ownership transparency. We've moved from what was for a long time a theoretical thing that a lot of civil society campaigners were asking for in terms of how
Sorry. Very slow. We're losing. Reached here. So the way we have these for on tax questions to move forward to the panelists answers for them. So, you know, with that said, you know, thank you very much for attending. Thanks, Peter. Thanks, Nienke. It was a great discussion.
Thank you very much.
Have a great weekend, everyone.
Thank you.
Bye.
Bye.
Bye-bye.